You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the OptionsInsider.com and co-hosts Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, that rockin' tune means it's time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the old Options Insider Radio Network, podcast network, on-demand radio, on-demand audio network, streaming, whatever you want to call it. We've got it for you. Lots of fun options-related content there. You can find it all on the flagship website, theoptionsinsider.com. That is kind of the gateway portal, the destination for all of our content. But, of course, you can also find it iTunes, Stitcher, TuneIn, all that fun stuff, even our mobile app available in the iOS and the Android app stores, and, of course, even the Amazon app stores. Can't forget about all three of you out there rocking the Fire phone or a Fire tablet. So many versions for you guys to check out and enjoy. And joining me on the old program today is the greasy meatball himself, Mr. Mark Sebastian. Mark, welcome to the old program, sir.
Hey, how you doing, dude?
I am doing well. Sounds like you are walking on bubble wrap.
I am not, but I am in an office enjoying my day, watching the markets move, watching all the trading.
And dancing on bubble wrap, or perhaps Doritos.
Crackers, to be honest.
Yes. Okay. I knew it had to be some sort of snack food. You were preparing there. I guess I caught you mid-snack. All right, while he's snacking, we'll turn to our other cohort/nemesis here on the old all-star panel. You know him, you love him, as Uncle Mike Tusaw from RCM Wealth Advisor /RCM Future /RCM MISC. Uncle Mike, welcome back to the Option Block program, sir, and how are things cooking in scenic and sunny St. Charles?
Oh, it's lovely here. 75 degrees, sunny, and not a cloud in the sky. It's a gorgeous day as always. It's no big deal here because it's always this way.
Why do people move to LA or San Diego? They have that weather right at their fingertips in St. Charles 24/7.
I ask people the same thing.
Indeed. The mysteries of life, sir, they elude us. But the mysteries of the market don't elude us, so let's dive right into them. It's time to check out the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is the portion of the program where we break down what we're watching, what's catching our eye out here in today's market activity. We are recording this for all of you playing the home game on Thursday, June 4th, just a few days ahead here of D-Day's anniversary for all of you history buffs out there. All right, and as Mark was alluding to earlier, a bit of a D-Day in the market today in terms of a pretty pronounced sell-off across most of the major indices. S&P, Dow, and NASDAQ all off about 1% or so on the day. So a lot of red on the screen really today. Not too much really popping north, except, of course, For a ye old, the VIX cash moving up about 1.6 handles on the day. Or for those of you out there, cover your ears, Mark, who like the percentages, 12%, percent of a percent. We love it. Trading right around 15, or hovering, I should say, right around 15.30. Maybe the VX up. We'll have to check how that one's performing today as well. But aside from that, not a heck of a lot of green on the screen. CMG, the stealth Apple, kind of taken up a wee bit today, and that's pretty much Goldman up a little bit today, and Lulu kind of fractionally unched. They do have earnings coming up next week, so other than that, not a heck of a lot that's truly green. Oh, Netflix, the old Widowmaker, also rally. I guess everyone's on a down day in the market, everyone's streaming some video. So, Uncle Mike, perhaps we'll start with you. What's catching your eye in today's sea of red on the screens?
The sea of red, I think it's a great opportunity to sell some puts. I never met a pullback I didn't like selling puts on, I don't think. Well, except in 08, I didn't like it then. But I didn't sell any puts then. But, yeah, I think that it's a down day today. And I think with tomorrow's non-farm unemployment day, I think tomorrow should be interesting. And with the VIX coming up the way with which it has, I think today was a great opportunity for selling some puts.
You degenerate put seller, you, sir. Selling puts into every little sell-off we have here. Just blasting away, nonstop, willy-nilly.
Well, even if I was a put buyer, you'd still call me degenerate, so what's the difference?
You can be a degenerate premium buyer as well. You know, those addicted to gambling, you know, they have issues as well. So there's degenerates on both sides of the fence. We don't judge here. We just slam across the board.
That's true. You're not prejudiced. You hate everybody.
Yes, exactly. And Mr. Greasy Meatball, in addition to those tasty, delicious crackers, what was catching your eye over there in the land of the pit today?
You know, we had a great move in VIX this morning, and for a brief period, things got kind of crazy there. We saw VIX cash get over the June future. We saw the June future get over 15 for a while, and then, we made one last surge to try and get a little lower. And the market was just unable to really sell off. It ran into what one of my students would call a Bollinger Band, which I thought was something that like a surgery that you got to make you skinnier. But apparently it's technical analysis. Ran into a quote-unquote Bollinger Band and bounced there and was really unable to get through it. So we ended up with a VIX cash versus VIX June, which still has a couple of weeks. So it's got some teeth basically on top of each other. With July behind it. So the market is actually pricing in some legitimate fear on non-farms and probably a little bit of grease as well. And then I think the volatility in the bond market is another thing that people are seriously watching.
It's funny you mentioned the Bollinger Bands. That kind of goes back to our discussion on technicals from a week or so ago, where we were saying the only ones that seem to have any real impact on the market are kind of the very, very low-hanging fruit, and it doesn't get, unless you're talking Fibonacci, it doesn't really get much more low-hanging than Bollinger Bands at one standard deviation. And so we see orders lining up there, and like you mentioned, they does occasionally cause things to bounce and resist. So the low-hanging fruit stuff does tend to have some weight. We're not saying we dismiss all of it. I think I've said this before on the show, but one of my more heartbreaking moments of technical analysis came when I was still an undergrad, and we were doing taking one of my first derivatives courses, and we had one of our assignments, like a group assignment, we had to come up with I think our own trading strategy, and so we were sitting down and we thought we were really cool. We analyzed all this stuff, we ran all this data, and we thought, hey, what an awesome idea. Here's this strategy. It goes one standard deviation above the market, you sell it. It goes one standard deviation below the market, you buy it. We're geniuses. And we go up to the professor, our little group, it's like, look, here's our result. And he looks at it and goes, yeah, these are Bollinger Bands. And we're like, oh, we were so deflated. we thought we had struck upon the secret genius, the secret wisdom of the market. And we were just a few years late to the party, I think. When did he create those Bollinger Bands?
I don't know.
Probably at least a decade late.
Yeah, I don't know.
All right, and aside from the myriad nonsense that is technical analysis in the old markets, other things kicking off in the options world today. Mark, since we're on the subject right now of the VIX stuff, I know you've been watching. We've been talking a little bit on the Value show about the VIX up, VIX down. Today a day, obviously, when you want to be looking at the old VIX up, ticker symbol VXUP, doing a decent amount of volume, not lighting it up today the way you might assume. It had been averaging about 70,000 contracts a day doing about 84,000 today, so a little bit stronger than average. But you expect a day like today, this is the prototypical use case for a VIX up type product. What's your feel on how it's performing here today? It closed 28.80, up about nearly 3/4 of a handle there, or so about 2.3%. Again, percent of a. It gets kind of redundant at that point. But what's your feel on how it's performing? A and B. I mean, saw an uptick in volume, but perhaps not the spike you might have assumed.
Yeah, I just don't think it's working. You've got it up. So it was up 64 cents, like you said, 2.3%. Meanwhile, VXX, which it lambasted, is up over 3%. So actually reacted better than VIX up. And the VIX future, the June future, was up 4.5%. So of the products claiming to track VIX, it did the worst. So like I said, I think these guys may have found a way to do some sort of like fixed VIX combination future thingy, but it is not a tracking the cash on any level, shape, or form. So I'm going to give that the big old fail for what they're trying to do. They may have unintentionally found something else,
yes.
but that's it.
You mentioned the off-maligned VXX, and I'm looking at it right now. And you're right, they had almost identical moves in both products. So VXX, the one they kind of ostensibly created their product to solve the problems with, had about the same move, and percentage-wise, because VXX is trading lower, it's actually a more substantial move, about 3.2% versus 2.3% for that same 60-odd cent move they had in both products. So yeah, kind of at least a day like today kind of obviates the need for a VXUP. We'll see if this continues. Mike, have you been paying attention to these at all, or is this kind of more just noise for you?
Very much noise. It's one of those ones I'll save that one for Sebastian. If we're going to trade the index, we'll trade the index.
Yeah, keep it simple. Keep it simple, stupid. And the acronym, of course, Mark's favorite soft rock metal band of all time, KISS. Moving on to some other things going on in the world of options. We have all of our content coming out still. So much recorded down there at the OIC conference is still coming out to the network. So a lot of our conversations with the heads of a lot of different exchanges over there, including the head of BATS over there and what they're going on over there. And they put out a release today saying that they're lighting it up from an options perspective. This is an options exchange that was much derided when it launched. It's like, what's the point of this thing? And it kind of suffered for a while. Had some pretty high profile technology failures, of course, around the big IPO of their own. Took down Apple with them. Wasn't good times for them. Now they're up about 10% in the market, which is kind of interesting in and of itself. And one of the reasons I also pulled this too is as a chance to test whether you, Uncle Mike, and the Greasy Meatball actually read the notes that went out today. Because if you did, you'll be able to cheat in about 2 seconds. But they also put out, in addition to them getting 10% of their market share, which is a record for them, they also put out what their top 5 most actively traded classes over there on BATS options were. Uncle Mike, I'll give you first swing at the bat. Some of these I think you'll be able to guess.
SPY, Apple, IWM, Facebook, and Alibaba.
Someone reading his notes. Cheater.
If you ain't cheating, you ain't trying.
Yes. Surprisingly, he is exactly correct, listeners. See, we write this stuff up for these guys, listeners, and we make it so easy. We spoon feed it for them, and it makes it so much easier for everybody. Yes, he is indeed correct. That was SPY, Apple, IWM, Facebook, and Alibaba. Most of those probably ones you'd expect. A few, maybe not. Alibaba, probably a little bit of a surprise to people still these days. And IWM sneaking in there, doing some decent volume. A lot of that, of course, depends on the different fee structures of these exchanges and who's paying what for who, why they're putting up these contracts there. But still, interesting stuff. Moving on to the other side of the fence, that's kind of was the big talk of the market. Not so much an option story, but that's one of the reasons the market was moving a bit today, was kind of a little bit of a back and forth between the International Monetary Fund and the Fed. The IMF kind of calling out the Fed a little bit and saying, yeah, we don't think, despite the fact that you're saying you still want to keep that on the table and you still want to raise rates and you're still concerned about inflation, we think that's all crap and you shouldn't do anything, at least until next year. And they made some in terms of Fed speak and international kind of fund speak, this is actually pretty strident stuff. They said they don't think the Fed should raise rates until the first half of 2016. because there are, quote, significant uncertainties as to the future resilience of the economic growth. They say there's a strong case for waiting to raise rates until there are more tangible signs of wage or price inflation that are currently evident. And they also go on to warn the Fed that raising rates too soon could trigger a greater than expected tightening of financial conditions or a bout of financial instability, causing the economy to fail. This would likely force the Fed to reverse direction, moving rates back down towards zero with potential costs to credibility. So they're kind of saying to the Fed, if you move now, you're going to look like an idiot because you have to go backwards on it really quick. So this kind of surprised me. You don't see a lot of big organizations like this kind of wagging the finger at each other very often, let alone at a time when it's kind of still very sensitive stuff. This kind of is interesting. Mike, I know you've been watching the Fed and, well, not just the Fed, but bonds and treasuries a lot these days. It's kind of been catching your eye. You kind of are de facto Alex on the show these days. What was your take on this kind of bit of a back and forth here between two groups that don't usually play this game?
Yeah, this is something that is pretty interesting. The fact that one person is daring the other person, and it kind of reminds me of the scene from that movie A Christmas Story when they double dog dare him to stick his tongue on the on the frozen telephone pole. It's the first thing that I think of when I see this. But the other thing, I'm so sick of interest rates. I know they're the big story right now, but I really would like to trade and invest off of something else. It's like the tired story of baseball is always, should Pete Rose be in the Hall of Fame? And I'm just so sick of that argument, whether it's one side or another. This is kind of like the market's version of that. Can we please talk about something else? I understand, Mark, it's a big story today, and I think this is interesting. The fact that the IMF is getting into it, and they're, like you said, they're kind of baiting and trying to get Janet Yellen to do something too. But I just wish we could move on and do something else in the marketplace.
Yeah, I think I was more interested in kind of the unprecedented kind of slamming that was going on more than anything else. Yeah, we try to avoid rates talk here as much as possible. I think this is our first kind of big rates discussion for quite a while on the show, because you're right, it does get kind of bogged down. I kind of agree that I don't think they have much in the way of ammunition to really think about raising rates. Mark, you're probably pretty happy about this, I would think, because it's making your stake look a lot more of a foregone conclusion.
I mean, what I don't understand is, why does the IMF keep copying me? Why does everybody keep copying me?
Just going to say, did you actually draft this release for the IMF?
I've been saying that it was going to happen since, I want to say, January 1st, that nothing was going to happen. Maybe even, we can go as early as middle of last year. I said nothing was going to happen in 2015. And I continue to still believe that. And, if they want to get rid of this story, Mark, what they should do is open their mouths and say, you know what? Instead of kind of playing this silly game, nothing's going to happen. We're not going to review anything until December, and rates are staying in place, and that would solve the problem. And really, that's probably what they're going to do anyway. And it's just dumb that we're in this discussion.
It is kind of silly that they don't just say, okay, yeah, it's off the table till at least the end of the year. That would seem, everyone seems to know that kind of anyway. Why not just come out and say it? Why do this?
Except for Jared.
Yeah, that's true. There's a reason why he hasn't been on Vol Views in a while. He's hiding, sir. He's hiding on that stake wager you two have. Moving back to the options realm, a little more away from the macro. Looking today, it seems like Goldman is long some puts in USO and XLE. At least that's the tone we get coming out of whenever they're putting out research, talking something up or talking something down. Chances are they have the other side of that trade, and they put out a big thing today. Bloomberg picked up on it as well, saying that vol is just too low, they think, particularly in the near-term downside puts in USO and XLE in particular. That's the ones they put out a report citing the, quote, dangerous complacency of these products, the cost of 1 month hedges on the energy stock ETF. That, of course, I think that's referring to USO, has dropped 59% since January, while a similar measure for the XLE has fallen 46% since February. That suggests, according to them, that investors do not expect the OPEC meeting to be a specific catalyst for shares. So there we go. Goldman coming out, beating the drum, saying, load up on some near-term downside puts here in XLE and US. So I got XLE up here right now. So let's take a look here really quick, see what they're working on. Not surprisingly, this morning, Mark. A 17,000 lot of XLE July 72 puts went up. Think that could have been Goldman coming out before this newsletter went out?
No idea, but here would be my response to them. Beyond that is, take a look at where the OVX and the OIV are trading. The OVX is 38, the OIV is 37. And then, let's look at realized volatility over the last 20 days and 30 days. And in the last 20 days, the realized volatility has been about 31.60. And in the last 30 days, it's been 29. So I don't know about you, but where I come from, this is just me, but where I come from, a 9% risk premium built into an option is plenty risk averse. So I stridently and categorically disagree with them on every level that volatility is underpriced. I would sell this and have a trade like that on in my track the trade portfolio.
Someone did maybe listen to this. Someone bought 17,000 of these puts straight up this morning. Maybe they're a customer of Goldman's. What they're saying here, Mark, of course, between the lines is that they bought these puts and they think they should have spiked more than they got. Mm-hmm. So they're saying, hey, these go up. Uncle Mike, I know you've been busy blasting out every XLE put you can get your hand on. What do you think, hands on, I should say, what do you think of Goldman saying you're on the wrong side of that fence?
Well, I guess I really am, because I'm trying to get it. I'm trying to get longer, some more XLE with it coming down like it has a little bit. So I actually have, ironically, a small position in the June 76 puts. I'm short those puts it's a very small position, but just trying to continually add to my long XLE position. So hopefully the volatility continues to. I guess if it's dangerously low, I don't know. I'm happy to own it at 76, but it seemed to me like it was some pretty good premium when I was looking at it. So I guess I'm on the other side of that trade as well.
That's you, the other side of that 17,000 lot there, Uncle Mike.
I don't trade that small.
Yeah, that's true. That's your starter trade for the morning when you're first getting going. All right, and I forgot to mention at the end of this report here, they mentioned too, they also have a prediction, the Goldman analysts thinking oil's due for a bit of an aggressive correction to their tune, about 25%, back down to the 45 handle by, I think what they're saying here, by October. So not that far in the future. They're expecting a pretty aggressive reversion back to that, almost the lows that those products hit. I think they hit around 43. So some serious bearish sentiment coming out of here in Goldman land. We'll see if all this talking down of crude and all this talking up of puts, how this plays out. Certainly seems like a lot of downside put action out here in XLE, just for an example. So some people clearly read in this report, including Bloomberg, 18,000 of these very near-term weekly puts going up as well. Lots of stuff flowing. Looks like that was more of a spread. But speaking of spreads and unusual activity, let's just get right to it and kick on over to the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the show where we break down what's moving, what's shaking, what's lighting up the old options market, particularly from a weird or a wild, unusual activity perspective. I want to kick things off with a name we've discussed once or twice here on the program in the past. This is Ocwen Financial Corp, ticker symbol OCN. Selling off today pretty aggressively, about 4%, closing right around $10 even on the day. And this is a name that does about 8,500 contracts a day, so fairly robust compared to a lot of the names you talk about here in the Odd Block, and doing nearly 4x that today, doing about almost 32,000 contracts out here today. So a lot of paper lighting it up here in Ocwen, and it seems like overall puts were the order of the day. Looking at the stats here, about 30,641 of that nearly 32,000 of those contracts were puts, 598 calls, giving us a 51-1 puts over calls ratio. Let's dive into what we actually saw. And lots of pretty much put buyers, it seems like, across the board. We started off talking about some near-term stuff. The June 9 puts going up for about it's like a dime or so, with paper buying a lot of them, total of 11,000. We profiled 10,000 this morning, total of 11,000 going up on this strike on open interest of 2,100 contracts. So clearly opening paper there. Fast forward out to July. We also saw some love there on the July 8s and the July 9s, both strikes out there. 4,000 of the July 9 puts and 10,000 of the July 8 puts also going up. The 8s going up 15 to 20 cents, and the 9s going up for, looks like, about 30 to 40 cents in that range. This name just had a bit of an upgrade to their credits, and still people are coming in just gobbling up puts on this name. Maybe some of that due to the somewhat decent sell-off here in the underlying today. I don't know if we have any stock going up with these. We didn't spot any stock going up with these. So if these are straight up more vol plays, or if the people are actually just underlying holders hedging, or just straight up speckers. Either way, a lot of put activity in July and even June, even some rolling out to October, about 2,500 of the OC8s and about 1,300 of the OC9 puts. So the 8 and 9 put strikes, the strikes du jour out there in Ocwen. Mark, we've been talking about Ocwen, seems like quite a bit over the past, the better part of the past year, spotting a lot of different activity out here. Today, seems like the put sellers are ruling, or excuse me, put buyers are ruling the day out here. What's your take on all this kind of open and put activity? You think it's pretty much just a straight up spec? Think this is an underlying guy hedging? You think this is more, are they doing this with stock today? Where do you fall on this one?
I don't know. It's interesting. If you threw out the Junes, I would think it maybe was a hedge, but that was just, those Junes are pretty aggressive that the underlying is going to fall. So to me, it looks like it's probably speculative. That'd be my bet. And so I think there's a lot of people that think this thing may be going to 5 or 6 or somewhere in that range. Or threaten some of the lows that it had earlier in the year when it was under all those investigations.
Yeah, I agree with you. Kind of the June leg is kind of the one that is kind of the outlier there. You pull that one out, you're right, it could look like someone having hedging underlying. Typically, if you're talking options that are almost weeklies at this point, then you're not really playing with hedging. You're looking at more specking. So people are obviously thinking that, at least in the near term here, this sell-off in Ocwen not done, and putting a lot of money where their mouth is, that we got some more downside to come out there in OCN. So file that one in your to be watched category there, listeners, if you're looking for names that may have some continued downside. As we move on into another name, my old stomping grounds, this is good old Intel, ticker symbol, of course, INTC, closing today about $32.31. This name's been averaging close to 100,000 contracts a day, which isn't bad volume for Intel these days, even though a lot of the names are off. It's not terrible. I know there were many, many summer days, and we had a lot less paper than that going up, and then split that across all the multiple pits, and you get an idea of how thin it got for a while there. But yeah, doing about 81,000 or so contracts today. And again, puts were leading the day, not as stark as in Ocwen. It's not 52 to 1. It's more of a almost 2 to 1 puts over calls, but still, puts were the order of the day out here in Intel as well. Let's kick things off once again closer to home in the June put spectrum, where the June 32 puts first lit up our attention with a 5,000 lot getting picked up for 34 cents on the ISE. As the day went on, a total of nearly 9,000, so another 4,000 sliding in there afterward on a total of 25,000 open roughly on that strike. So a lot of put love on that strike. We also saw about 6,000 of the June 32 half puts going up today as well, and on 6,000 open interest, so perhaps a bit of a close there as well. But that wasn't it. That wasn't all, listeners. No, not by a long shot. We also skip out a bit to a little bit farther out to the July time frame, where we also saw some kind of funky put love on a bit of a ratio. In particular, it was the July 32 puts, where when we first started profiling these, paper bought 3,456 of them for 79 cents. As the day went on, a total of 8,000 went up on that strike. We also saw paper selling the July 34 puts 2,300 times for $1.86 total on the day for that strike. of about 5,000 contracts. So it looks like some spreads going up, perhaps closing out here in June or rolling to July. But of course, you can say the same almost for July as well. So much open interest on all of these strikes, Mark, that is kind of a little bit obscured just what our friend or perhaps friends out here were up to, slinging some straight up puts in June versus a ratio spread in July, or was it one ratio kind of spread versus another? Where do you fall on this puts versus put spread versus ratio swap debate, sir?
I'm almost certain it's a roll down. All of the volume comes from kind of late May, early June, and there just happens to be about a 5,000 lot that went up for about $1 on the 29th. And it looks like the guy cashed out this morning and then kind of increased his position. So he basically pocketed some dough, used some of the excess dollars, and then moved to really take advantage of more movement lower. So I'm almost certain the July one was a roll and the June also, but there was just put buying across the board in Intel today. Lots of activity. Almost all in put buyers, kind of before it took this leg lower. So they were pretty happy.
Yeah, they got a good handle in there. And, it wasn't obviously to this one-sided nature, but when I was out there for a while, it was pretty much, it was your standard large equity flow pretty much all day, every day. People, large funds, buying puts and dumping calls all day long, all day, every day. So maybe they got the put leg going today aggressively for some reason. We don't see the calls going up today as much, all puts, but still, yeah, a lot of put love and perhaps some growing trepidation out there with Intel and these valuation levels. Moving on, staying in the tech realm here, Uncle Mike, you may want to cover your ears for this last one. I know this is a bit of your Waterloo, your Vietnam, so we'll try to get through it without you shedding any tears. I am referring, of course, to that tech juggernaut / widowmaker / thing of nightmares known as Cisco. Ticker symbol CSCO. Closing today, $28.61, down about half a buck or so, or about 1.5% on the day. This is the name, as you might imagine, does some volume, does about 60,000 contracts a day. Did over 3x that today, doing 190,000 today. So a robust day to say the least out here for Cisco. And to find the lion's share of this activity, we got to scroll out a bit to the AUG expiration cycle. And there it is. Kind of leaps off the page at you, listeners, when you're looking at this one. It was all AUG all the time and all AUG calls for the most part, with some slight puts thrown in there as a bit of a kicker. In particular, we started off the day profiling someone coming in blasting, just blasting away. It's the only way you can describe it. On the AUG 30 calls, those are about $1.50 out of the money or so. So pretty close near term out of the money calls here. Blasting out 102,000 of them for 51 cents and 50 cents. So doing it on splits a little bit. Good chunk of those going up on the SIBO. Not surprising. Big trade like this level, that's going to be facilitated on an exchange like the SIBO. And again, probably a stockholder. See this kind of size overwrite. It's very rare that someone would come out and just blast them out naked. Perhaps, but it doesn't seem that way. It looks like someone probably trying to carve out a wee bit of yield, getting 50 cents plus if the stock moves $1.50. So you're talking about $2 on this stock here for holding it through August. If that works out in his favor, not a bad trade. And if it doesn't, he pockets a nice 50-odd cents or so. Also see about 15,000 of the AUG 27 puts going up. Perhaps he's legging into a very, very, very weird ratio collar, or perhaps those puts are going up against someone else's trade here. Either way, funky stuff. But yeah, the lion's share of the activity, total of 118,000 of these calls going up on the AUG 30 strike paper, selling on open interest just 11,000 contracts. So it's clearly opening paper, and it's not a roll. There's no other legs going up here in June or July that we would have noticed. Certainly would have seen 100,000 contracts going up in another month somewhere. So it's clearly that's opening, and it's clear that it's new paper, and it's clear that it's probably someone just squeezing all the upside juice out of Cisco. Uncle Mike, you can admit it. Was this you? Were you back in Cisco looking to get some income?
Nope. I'm not going to go back to the dog that bit me. I know better.
Even for a juicy 50 cents all the way through August, sir?
Oh, now you're getting me tempted now.
At least 10,000 of those were you.
I might have to walk away from my short XLE 20 puts for that.
That's true. You got to have one or the other. All right, Mr. Sebastian, what's your take on our friend just crushing all the calls here in Cisco?
I heard through the grapevine that it was 100%. I am 100% certain it was an overwrite, and apparently the customer was through Deutsche Bank. So, absolute. So my understanding is it's a 100% an overwrite. If you look at it, not a terrible overwrite, right? If between now and August he gets it goes through that strike, he makes 6%. But if he's your normal person who understands how Cisco moves, he's probably just planning on the stock being nowhere and keeping his 50 cents. So, it's not a bad play. And the fact that he got it done in kind of one fell swoop at one price shows you how when you go to the big exchanges and these big names, you can get things done fast. Because this was done 100% electronically.
That struck me how much they were able to get off and at those prices, because I was kind of alluding to it before, but these guys who are market makers in these big, broad equities, they know the drill. They know they're going to eat calls all day long, so they're reticent to take down a big chunk of them without really making you sell at a relatively aggressive level. This guy took them all. These people took them all down for 50 and 51 cents, so or 51 and 52, whatever it was. Either way, yeah, fairly impressive execution.
Maybe that's a sign that volatility is a little low in Cisco. Who knows?
There you go. Goldman will be out with a research paper shortly saying, take some of these calls off our hands.
Well, please. That would be actually Deutsche Bank would come out and say,
yes, you're
these
right.
calls are...
These calls are way overpriced from a vol perspective. You got to come in and crush some more of these for us.
Yeah, exactly. I can see that.
All right, before we malign any other trading houses here, let's move right on into, because it is Thursday, it's time for you guys to join us on the old program and time to dive right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. Like the man said, no shortage of ways for you guys to get your questions featured here on the old segment. Of course, the easiest way probably is going over to theoptionsinsider.com like a lot of you did today. Leave some comments on the website feedback form or on the website itself, on the show notes, wherever you want to put them. We'll route them to the right place. Or, of course, shoot us an email, questions at theoptionsinsider.com, or social media, twitter.com/options, facebook.com/theoptionsinsider, and on Stock Twits, we are Options Insider. All that's baked into, at the very least, the iOS version of the app. I think the Android version, for some reason, has some issue with the contact stuff. So hit us up on all those various areas, and we will love to hear from you. Just like our first listener here goes by the handle Value Investrader. I like it. So he's a value guy, he invests, and he trades. He's got kind of all of it in one here. And he writes, hey, question for you, Option Block, regarding unusual options activity. When vol and open interest increase, how do we know whether they were bought versus sold? Well, he kind of answers his own question here, I think, within his question. He's talking, of course, listeners, about what we just did on the Odd Block, what we do every episode of this show, where we kind of parse what's going on a lot of these trades. And obviously the first thing we look at is open interest. Sometimes, as we saw today, it's hard to tell. There's a lot of open interest obscuring what's actually going on that strike. So you have to go to some secondary measures like volatility, and then use that to kind of be your gauge. And certainly, when vol increases, that's a very good indicator. All other things being equal, offsetting some crazy aberrant move in the underlying that could make vol spike. When vol is increasing and open interest is increasing, chances are that that's a buy, because you don't see people are going to generally bid up a strike if they're, like we just talked about. The flip side of that trade, like we just talked about, someone blasting out 100,000 of those calls on that strike. Guess what's going to happen to vol on that strike? It's going to get crushed. And the underlying didn't really move that much. So you can kind of go and look at that. That was an easy one, no open interest. But let's say there was a ton of open interest there hiding that. Let's say it was Apple and every strike's got 100,000 open. Then you can go and dig into the vol a little bit and see, hey, this vol is actually coming in. This is where it kind of spiked down a little bit. This was clearly, all other things being equal, looking at open interest, looking at the volume, looking at the unusual, spike that caught your eye, and say, hey, okay, this was probably a sale, or in this case, with vol spiking, probably a buy. That's how we use vol for the most part. Open interest not as useful, obviously, because it's a lagging indicator. We've lamented about that many times on the show, and maybe have an OCC trying to do some sort of, intraday updates to open interest. I know they're working on that, but nothing big yet. So we're still open interest, kind of a secondary thing for us at this point. Mr. Mike, Uncle Mike, if you will, what do you have to say for our friend here, Mr. Value Investor and Trader, besides nice handle?
Yeah, I definitely got to admire that handle. I'd like to get your permission to use it to be the Value Investor Trader Advisor, if I could have that.
There you go.
So maybe if he could email me, I'd like to have his permission to use that at some point.
You might have to have cut him a marketing invoice there or something.
There you go. So this reminds me of I remember when I was a new employee at Options Express, and the current options analyst who always talked to the Wall Street Journal was not there that day. And so the Wall Street Journal needed a quote on something. So I got my first big shot at talking in the Wall Street Journal. And I remember they were asking me about some options on Intel, I think it was. And this was, like 10, 12 years ago. And so I said what I felt, and that there was a lot of put activity in Intel, and so I remember looking at it. I remember looking at the open interest, looking at the activity, looking at how vol was, and they were asking me about a specific strike price. And I remember saying, I'm like, I don't think people are buying these puts. I really think that they're selling them, and for a lot of the reasons with which you just mentioned. And so I'll never forget it. It was in the Wall Street Journal. I saw it. I remember buying the paper on the way to the train the next day. I was all proud of myself, and there was a voicemail on my phone saying, this is so-and-so. I'm an exchange official from the International Securities Exchange. Call me immediately. And I'm thinking, he said, I read your quote in the Wall Street Journal. And I'm thinking, oh, no, what'd I do now? And I was just concerned that maybe I said the wrong thing. So I read my quote of what appeared in the Wall Street Journal about 50 times before I called him back. And I'm like, well, no, I stand by what I say. But when I called him, he was basically just saying to me, thank you so much for actually being an option analyst that actually has some type of intelligence, because of the fact that so many times if there's a lot of activity in the puts, automatically they get these idiots out there that say, oh, well, everyone's bearish on it, so that means ICE is going to go down. And, this is obviously, there wasn't quite as much coverage of options 10, 12 years ago as there is today. But I just remember thinking to myself that, to me, that was just basic analysis at the time. But unfortunately, people don't go the extra mile and read into this a little bit deeper, and they should, because they can really get burned if they just kind of take things at face level.
Mr. Sebastian, what do you have to say for our friend here who's kind of all of the above, value, investor, and trader?
Yeah, I think like I said, you said he kind of answers his own question, right? I mean, if volume goes up, if vol goes up and open interest goes up, you necessarily know he's a buyer. And, one way to tell, typically when a guy's closing a open short position, you don't see IV increase as much. And so, that's usually a good way to tell whether, whether it's an opening trade. But yeah, Mike, that's a hilarious story. I'd be shocked. I mean, even now that options are a little bigger, these reporters who are generally, do as best they can, they get it wrong a lot.
Well, that too is they're still so focused on what's happening right now and trying to parse it when you don't have all the information isn't there yet, and so they're kind of making assumptions, and they will go to the people who are comfortable just chiming in and saying whatever they want to feed those assumptions, so they can say, okay, we think this is bearish. They'll have someone come in and say, yeah, these puts are bearish, and everyone's happy, and then Mike, does a little bit of extra legwork and realizes, no, this actually is not the case. And so unfortunately, we don't see enough of that, Mike, which is why we spend a lot of time doing that kind of stuff here on the network, because when you're doing this stuff, you kind of want to at least try to get it right. At least that's our viewpoint here. We got a bit of a, this is a broad one here from Tom Inc., and not broad in the lady sense, broad in the kind of wide purview sense. We get a lot of questions like this sometimes, and this one kind of filtered through. He writes, what's a good intraday options trading strategy for SPY? People love these. People love this kind of, hey, I want to make a lot of money in options trading intraday. I want to do it on SPY. Seems like a very popular one. Apple, obviously, as well. And I want to, what should I do? What should I do? What should I do? That's kind of one of the big questions we get a lot these days. And we talked about a lot of strats here on this show. Obviously, you want to be intraday. You're probably going to be focusing on some of the cheaper premium stuff like the weeklies and slinging in and out of those. And we've highlighted so many of these on this show in the past, whether you're talking about just simple verticals because you're expecting a little intraday movement there, or you want to get more advanced, you get into things like risk reversals where you have kind of a premium neutral type position. So you put this on, if you get the movement you expect, hey, you're happy. If not, c'est la vie, didn't really cost you anything, or maybe even get a credit and you get a little bit more advanced and things like that. Mike, I know you do you don't really do intraday. You do more kind of like on the weeklies, using like the weekly put spreads to pay for longer term decay out there in SPY. Do you do anything on a shorter term kind of intraday basis sometimes?
Not on purpose. I mean, there's times that if I'll put on a trade at 9 a.m. and the market moves enough at 2 p.m., then I'll get out, but never on purpose to do intraday. I think that if you're looking to trade movement on the underlying, I think you're better off just trading the S&P mini futures intraday. Now, if you don't have a big enough account or if that's too big for you to do so, then I don't know what to tell you, quite honestly. But I think that from my experience, the best way to trade movement of the underlying intraday is to just do the futures. You don't have to worry about day trading rules. You don't have to worry about a lot of different things in terms of margin risk or whatever. I mean, in the futures world, trading's like Chicago voting: trade early, trade often. And so I think if you're looking to trade movement, I like doing it on the future side. Now, if you're trying to trade intraday vol, there might be something to be said for that in the world of options. Like maybe if you get a big dip in the marketplace, sell some puts, and then if you believe that the market's going to come back, then that way you have vol as well as delta on your side, as well as theta. There's something to be said for that. You can spread it whatever way with which you choose, but for the most part, I'm not much of an intraday guy.
Yeah, a lot of these questions seem to come in from futures guys who are coming into options for the first time. I bet you if we dug in a little bit to our friend Tom Inker, he's probably a futures guy. And that's kind of the outlook they bring to options. They're used to slinging intraday, having their support and resistance levels and kind of trading in and out. And they want to bring that kind of same mindset to options. You could do it, clearly. But yeah, I kind of agree with you. I think sometimes the underlying has its use cases, and that could be one of them. Mr. Greasy Meatball, what do you have to say here for our friend Mr. Tom Inc?
SPY is so efficiently priced is the problem because it's so active and it does so much. Now, one thing you can do is, watch in the same way that you might watch, different curves or bands. If you spend some time looking at volatility in a similar way, you may be able to day trade volatility along with the underlying and use volatility in essence to try and get cheaper deltas. And, if you can figure out how to trade SPY volatility as such that you can acquire relatively inexpensive deltas, that would be how I would look to use them to day trade. But I would tend to agree with Mike. Why day trade options when you can day trade S&P 500 E-mini futures?
Especially once the advent of the E-mini came out, it kind of obviated a lot of the any holdup you would have had of slinging maybe the big futures. The E-mini makes it so easy.
Yeah, I just don't see it.
Good questions. And the Bollinger Bands raising their ugly head again. I'm going to have to sue that guy. He stole my idea. We're going to wrap things up here with a quick question from a listener who goes by the handle Sin City. They write, why don't you use hashtags for each of the shows to sort out the different questions? For example, hashtag option block, hashtag volatility views, etc. Good question, Sin City. We have toured that idea in the past, as you might imagine. Problem is, as you see from some of the questions we get, people have tried to express a lot of very lengthy ideas in 140 characters on Twitter. So I've kind of been loath to cut them off by saying now you have to address it to us by using, look how long the hashtags are you put in there. Option block, that's like 15 characters right there. Or volatility views, that's cutting off a lot. We can do hashtag VV, hashtag OB or whatever, but those are kind of generic kind of hashtags. Plus we have so many shows, I don't want people to have to go out there and remember every hashtag for every single show. So I just figured make it easy. Hit us up on the @options handle. That's pretty hard to forget. We're just @options on Twitter. So if you're a Twitter folk or Twitter guy, and a lot of you are, that's kind of the easiest way to do it. We won't stop you if you want to use hashtags. Go for it. I'm just trying to let you guys have all the characters you can possibly use to express some of these questions. Some of these options questions we get, kind of hard to fit into 140 characters. You see some of the emails we get, listeners. They go on for pages. Try squeezing that into 140 characters. You'll see what I'm talking about. All right, everybody, that's all the time we have for the mail block for today. Now we're going to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we dive into what we're watching, what we're keeping an eye on for the rest of the week. Got a little bit of a number coming out tomorrow. Maybe might have a few people paying attention to that. Of course, I wonder if these comments out of the IMF even downplay some of that love at this point. But that certainly is what a lot of people are watching. Maybe Mr. Sebastian, we'll start with you. What's on your radar for the rest of this week into the weekend?
We've got the allegedly the Greek deadline is tomorrow, although I'm never sure what deadline it is or when it is. And then, non-farm payrolls are two things. And then next week, I think we start Fed Watch June, and that could be interesting just to see what they're going to say. Hopefully they'll get their act together and just come out with it and stop and allow the market to kind of move on. I don't know if they purposely want to be the center of attention. I mean, am I a governor? Because that would be the only way that they should want to be the center of attention.
Yeah, I hear you.
So
it kind of is annoying that we had this pronounced sell-off today going into the non-farms. We were hoping to do a little analysis here after the close and see if non-farms was having any really market premium effect on the market today from a vol perspective after the close, and kind of hard to see that now with vol everywhere across the board kind of spiking. You can't really carve off, here's the percentage of non-farms. You can estimate, I suppose, but it's just a guesstimate at that point. So I suppose we'll have to wait and see if non-farms are perhaps the market mover they have shown themselves to be in recent months. Uncle Mike, take us home, sir. What are you watching for the rest of this week into the weekend?
Same thing with what you just mentioned. I think that tomorrow, with what happened today, even if the news is bad tomorrow, we might be at a point to where the market may want to bring some life back into itself, to where even if it normally would have gone down, I could still see it possibly coming up tomorrow, just based on the fact that we had the sell-off that we did today. So I guess let's just continue to watch the Fed, I guess. That's just what they want us to do.
You love it. You love talking rates. I think next episode, all rates all the time. You there, Uncle Mike? Can you handle it?
Sure.
Rates and Cisco. The rate block and then the Cisco block. Back to back.
There we go.
That's like your nightmare episode. All right. Before Uncle Mike panics and hangs up, let's close out the old Around the Block segment and bring this episode of the Option Block to a close. But before we shut everything down, let me check back here. Each of my cohorts here on the old All-Star panel, see what they're cooking up that may interest and or intrigue you out there in the listening audience. Uncle Mike, we shall start with you. What is cooking up in the lands of RCM Future /Advisor /MISC?
Calling all hedge funds. If you are a hedge fund with around $1 to $5 million under your management, and you feel that you are paying too high of a commission and you'd like to trade through either TD Ameritrade or Interactive Brokers, give us a call at RCM. We work with hedge funds in that situation, and we can save money on commissions and provide advice if that's something with which you're looking for. And same deal would hold true if you are even an individual investor. And even if you just have like maybe $25,000 to $50,000 and it's something with which you're interested in, give me a call. Would love to get to chat with you to see if we may be a fit for you as a self-directed trader. 312-212-3531, or send me an email at mtusaw@rcmfs.com.
There you go. Self-directed traders, hedge funds, everybody, your grandmother, everybody. Just call up Uncle Mike because he wants to chat with you. He's a fun guy to chat with, even if you don't want to do stuff. He'll tell you all kinds of fun football stories and stories about the Wall Street Journal. It's good stuff. Good time. Give him a call. I'll love to hear
all sorts of fun.
All sorts of fun. All right. Speaking of all sorts of fun, you can have all of that at the Option Pit Boot Camp. Mr. Greasy Meatball, when's that boot camp coming down towards us?
Starting on Tuesday. So go to optionpit.com/events to get yourself registered, and we'll see you there. And then don't forget, everybody start putting your calendars in for a live podcast on July 30th at Smith & Wolinski's in Chicago.
There we go. So, steak on Greasy Meatball for everybody who comes to the show. So remember that he said that, or at least I put those words in his mouth. And I have him on mute right now listening, so he can't argue about it. All right. And on behalf of the Greasy Meatball and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for sending in such great questions. Keep them coming, hashtags and all. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.